So today we're going to be talking about building a consistently repeatable strategy. There's a lot of components that go into this, but the cool thing at StocksToTrade, we have so many tools to kind of help you with this. And I'll discuss some of those. So one of the biggest things that you're going to start with when it comes to building a strategy is starting to test out different strategies. I mean, that's just the reality. If you're brand new to this, you don't know what style works for you. And something you'll find over time, some patterns and some strategies simply won't jive with the way you trade, okay? So if you see people that are successful with something and it's not working for you, that's fine. So continue to kind of try different things out. Now, what I would tell you, especially in the beginning, is two things: either paper trade. Now, I know paper trading gets a bad rap, and it's true. I mean, listen, at the end of the day, if you don't have money involved, you're not emotionally attached to the trade, so it's a different dynamic. But the nice thing about paper trading is if you screw up, you don't lose a bunch of money, okay? Like if you make a terrible decision, your real account isn't at like $1.93. So I tell people, start out with paper trading and just accept the fact that it's not real. But this is always kind of a no-brainer to me, but like if you can't make money paper trading, does it seem like a good idea to risk real money? Like to me, and remember, paper trading's not real. It's easier when you don't have real money on the line. But a lot of people just go straight in with real money and they lose a lot because of that. So my thing is, at least paper trade for a few weeks or a month or so, and get to the point where you're consistently winning and growing that paper trading account, then venture out. Like I think of like a flight simulator. Would you want your pilot on a plane to just never have flown a real plane? Like he might have studied really hard and spent a lot of time in the flight simulator, but then you're walking down the concourse, he's like, hey everybody, this is my first flight in a real plane. I mean, how would you feel about that, okay? So use paper trading as the flight simulator to learn the process, the repetition, etc. Then takes the next step. And the next step is trading really small, okay? So trade one share. Now I get it, no one wants to do it. You make 100% on one share and you make like $2, okay? But start out small. I greatly, one of the favorite stories I remember is Bryce Tuohey. You might know Bryce Tuohey, very successful millionaire trader. And he was on an incredible run. I think he was up almost $1 million, hadn't quite broke that point. And he went into a real dry streak and he was really struggling. His patterns weren't necessarily working. And what he did is he set his max stop loss at $10 a trade, $10 for the whole trade. This is a guy up almost $1 million in trading. But he was like, I need to figure this out. And because I'm in this slump right now, I don't have the privilege or the right to trade real money. I need to earn that privilege back. So he's taken $10 losses on trades, but then he got his stride back and then started scaling up from there. What a lot of people screw up is they want to trade too big too soon because they want the big bucks. But remember, that cuts both ways. If you've got 10,000 shares of a stock and it drops $1, you just lost 10 grand. Now, people don't think about that because they think, what if it went up $1? So edge in, build your position sizes up over time when you find consistency. So test out everything. Like I would tell you, trade every pattern, every setup, every strategy, but track your data, journal, and and look at what works for you. And that's why I'm a big believer in named setups. So if you're dip and rips or morning panic dip buys or VWAP holds or breakouts or gappers, have your spreadsheet where you have a specific named setup or code them or however you want to do it. And then you're going to look at that sheet at the end of the day, week, and month. And if you've got a specific pattern where 70% of them are highlighted in green and another pattern where 70% of them are highlighted in red, well, I'm going to quit with that pattern, even though I see others doing well. Remember, I mentioned that earlier. Some styles just jive with different people. Everybody's wired a little bit differently. But if you don't collect that data, you'll never be able to do it. A lot of people think they can do it in your head. You can't. It's just there's too much going on. There's too many variables. So focus on those setups that work for you personally. So track your patterns, track your data. Then the next thing to do is hammer those. Like one thing that I often talk about is like strategy hopping. People will find a strategy that's consistently working for them, and then they go out looking after shiny objects. So one of my favorite patterns is what's called the dip and rip, and we had a great example on Zap the other day. We'll bring the chart up. So Zap is a great example of what I call a textbook dip and rip pattern, and I'm going to go through those criteria. It's my favorite morning pattern. That's why I bring it up. I find very consistent success over this, using this pattern for over a decade. Really started emerging about 2016. Here we are, 2024. And what this is, this is a stock that drops news early in pre-market. We want that to get everybody excited, get everybody filled with FOMO. So when you see when that news dropped, stock gapped up big, but then just kind of chopped sideways. Now that's why the key of the dip and rip pattern is looking to buy the confirmed high volume breakout into the 945 window. So looking at that chart, you'll see it kind of just chopped around and then trickled lower into the open. So there wasn't that momentum and wasn't that volume. Now what happens very frequently in these types of stocks is they retest at 945. Now the key component of a dip and rip is making sure you're checking all your boxes. Zap is a great example of that, like a total and complete box checker. Early press release, hot sector, they're in electric vehicles. Electric vehicles are hot right now. Low float stock. Low float is key for dip and rips. That's why sometimes people will try and trade higher float stocks. They're not explosive enough. Float rotation. This thing had great float rotation into the 945 window. And again, a former runner. So like everything was there for Zap to explode at 945. Now, what's also great about the dip and rip pattern is you have a built-in stop loss. Like I know a lot of you as new traders, you're struggling with stops. And if you look at that chart again, you'll see that basically the opening low, that first opening candle, slightly below the breakout level, that would be the area where the dip and rip was a busted trade, and you would stop out. And I love these simple patterns because now if you buy that 945 breakout, stock reverses, goes back to the morning lows, the momentum is shifted, the idea is broken, and you stop out. And it's very easy for you to see that. It's just that opening candle. If it breaks below the opening candle, the idea is busted, we move on. Now, as you see in the Zap example, absolutely exploded higher. I mean, look at those green candles, just like 10 green candles in a row to the upside. Now, the next question is, how do you set your profit targets? It's very simple. You use the 3-to-1 risk to reward methodology, which is something I teach every day in the daily income trader system. And basically, we're using that breakout level at 945 as our entry. We're going to set our stop loss at the morning lows, and then we look to extrapolate our target 3 times what we're willing to risk. And the reason we do that is we all understand that losing is part of trading. You'll never have a 100% win rate. And if we can target stocks with 3-to-1, 5-to-1 risk to reward, then when our losers are small, we catch huge winners, and that's how we become profitable over time. Now, last point I do want to mention is when it comes to recognizing these patterns, it takes time. I say look at charts till your eyes bleed. It's some hyperbole, but it's kind of true. One of the great ways to massively cut down your time to identify these patterns is using what's called Oracle. Okay, Oracle is a day trading algorithm. I was the architect of it, and it specifically looks for 10 different patterns, but it's very heavily weighted towards dip and rips like Zap. And that morning, Oracle identified an entry right at that 945 peak level, and it just makes it easier because basically it spits out entries, exits, stop losses, and goals to basically speed up your time writing trade plans. I tell you every trade you should be writing a trade plan. Oracle writes them for you. That's the nice thing, is it actually, by using its algorithm, looking at the pre-market action, it identifies entries, exits, stop losses, and goals. So basically, by using it, you can write a clearly defined, good risk to reward trade plan in about 2 seconds because it just gives it to you. So breaking news gave us the news in the morning. We knew as a former runner. Oracle gave us the entries and exits. Nailed this trade, very consistently repeatable. We see setups like this 3 to 4 days a week, sometimes 5 days a week, but there's never more than a day or two where we don't see an explosive mover that checks all of those boxes. Now, look for them. Number one morning pattern. One thing I will tell you, if you're missing the news, if you're not seeing the news in time, breaking news chat, 2 25-year veterans of Wall Street that filter down all of the information only to actionable information. They're in the daily income trader system. Oracle, our day trading algorithm, cost over $3 million to develop, only available in the daily income trader system. And pre-market prep, where I go live 8:30 Eastern every single trading day, going over all these tools, building trade plans, answering questions. All of these things are included in the daily income trader system. Can you trade on your own? Can you do it on your own? Yes, you can. I did it for 3 years when I got started, made no money for 3 years. Once I started getting some of these tools, that changed everything. So you can go it alone and maybe 3, 4, 5 years later figure it out. Or what I would recommend doing is checking out a free webinar below on the daily income trader system. We do them all through the day, starting in the morning all the way up to night, even on weekends. 100% live. You can ask questions and you see Oracle, you see breaking news, you see what we do every single day, trading day. So if you want to cut that time down from 3 to 4 years that it took me back in 2006 and get access to all these amazing tools and identify the best trades, click that link, pick a time that works for you, and I'll see you there.